Imagine investing just 1,000 every month. It doesn't sound like much, right? But what if that small habit could eventually grow into several lakhs of rupees? Today, we're going to see what could happen if you invest 1,000 every month for 5, 10, 20, and even 30 years. And the most surprising part isn't the amount you invest. It's the amount of time you give your money to grow. Let's break it down. First, imagine you start investing 1,000 every month. That's 12,000 per year. After 5 years, you've personally invested 60,000. If your investment earns an average annual return of around 10%, your portfolio could grow to roughly 77,000. That's already more than the amount you put in. But this is where things get interesting. After 10 years, you would have invested 2 lakh from your own pocket. At an assumed 10% annual return, your investment could grow to around 2 lakh. So you've contributed 2 lakh, but your money could potentially become roughly 2 lakh. Now let's go to 20 years. This is where compound growth really starts becoming powerful. Over 20 years, you would contribute 4 lakh. But at an assumed 10% annual return, your investment could grow to approximately 6 lakh. Think about that. You invested 1,000 every month. Your total contribution was 4 lakh. But over time, growth could potentially add more than 5 lakh. And now comes the part most beginners overlook. What happens after 30 years? You would have personally invested 6 lakh. But with an assumed 10% annual return, your investment could potentially grow to around 6 lakh. That's the power of compound growth. Your monthly investment didn't change. You still invested just 1,000 every month. What changed was the amount of time your money had to compound. But there's an important warning. These numbers are examples, not guaranteed returns. Real investments can go up and down, and a 10% annual return is only an assumption for illustrating how compounding works. You could earn more, you could earn less, and in some periods, your investment could even lose money. That's why investing isn't about finding a magical investment that guarantees huge returns. It's about choosing investments appropriate for your goals and risk tolerance, investing consistently, and giving your money enough time to potentially grow. Now imagine what happens if you increase your monthly investment as your income grows. You start with 1,000, then maybe you move to 2,000, later 5,000. Eventually, perhaps 10,000 or more. That's when the numbers can become dramatically different. For example, investing 5,000 every month for 20 years at the same hypothetical 10% annual return could grow to around 38 lakh. And investing 10,000 every month could potentially reach around 76 lakh. Again, these are illustrations, not promises. The bigger lesson isn't that 1,000 will make you rich overnight. It won't. The lesson is that starting small can help you build the habit of investing. Many people wait until they have a large amount of money before they start. But you don't necessarily need to begin with 50,000 or 1 lakh. You can start with an amount that fits your financial situation, learn how investing works, and increase your contributions as your income grows. And remember, before investing, you should have a plan for emergencies and understand what you're investing in. Don't invest money you'll need next month just because someone online promises high returns. The goal isn't to get rich quickly. The goal is to become financially stronger over time. So what happens if you invest 1,000 every month? At first, probably not much. But after years of consistency, your contributions and potential investment growth can start working together. And that's the real power of investing. Not one big investment, not perfect timing, just small actions repeated for a very long time. Because when it comes to building wealth, starting early can be far more powerful than waiting for the perfect moment. If this video helped you understand investing a little better, subscribe for more simple personal finance and investing lessons.